We're 1 week out from a possible UAW strike that could eventually cause a major drop in the supply of vehicles, just a couple of years after we already had one during COVID, and as they try to transition to the EV world. Let's bring in Phil LeBeau for the details. Hi, Phil.
Hey, Kelly, let's start first off by talking about new data regarding used auto prices. And the reason we're showing you this is because I get a lot of questions from people saying, well, if you don't have the big three cranking out as many vehicles this fall, what's going to happen with pricing on used vehicles, which we know spiked late last year, early this year. Here's the latest data from Manheim Autos. 7.7% decline compared to last year, but more importantly, a 0.2% increase compared to July. They're stabilizing. It's a more normal used auto market. Average retail price down 0.4%. That is good news that we are not seeing the continuation of what we saw earlier this year. And so you are seeing a more normal used market. Take a quick look at the auto dealer stocks, some of them. And the implication here is that they will continue to do well, whether there's a strike or not, because there is enough demand out there both for new and used vehicles. With regard to the UAW and the big three, we're now at a point where we're getting proposals, counter proposals, and the wage gap, whether you call wage and one-time lump sum in pay. What you've got is UAW at 40%. Then compare that with where GM, Ford, and Stellantis are. And again, this is generally speaking where they are for GM, Ford, and Stellantis. Stellantis is all wage. GM and Ford is a combination of wage, one-time lump sum payments. And this is going to continue over the next week. There will be proposals and counter proposals. We'll see how much of the ability there is for both sides to close that gap between 40% and the low teens, which is where the big three are right now. Don't expect a lot of movement in these auto stocks until we see some kind of a resolution. And again, guys, we're not trying to be hyperbolic here, but almost everybody we've talked with in the auto industry says they do expect some form of a strike come next Friday, whether it's at one automaker, more than one automaker, a targeted strike at a plant, or an entire automaker. That is the expectation in the industry.
Those numbers of proposed wage and benefit increases are over multiple years or 1 year?
Over 4 years. Over 4 years. So the UAW is saying, you give us 40% over the next 4 years. And theirs is strictly about wage. GM and Ford are saying, look, we're going to give you 9 and 10% wage increase and then 2 lump sum payments over the next 4 years that bring it up to 16 and 15%. Stellantis today was 14.5%, strictly on wages, not with any lump sum payments.
So that $6,000 one-time inflation payment, or that's included in the 14% kind of math, Phil? I didn't realize that.
No, I don't think that those are included in there. Those one-time, there's a lot of lump sum payments here, Kelly and Tyler. You've got signing bonuses, especially at GM and Ford, and you also got lump sum inflation bonuses so that there's some protection here of like $5,000, $6,000. It depends on the automaker. So those are in there as well.
Okay, Phil, thank you. We appreciate it. And Steve, I just wanted to kind of get into, because people look at that and they go, why offer 14% when someone else is offering 40 over multiple years? But there's these lump sum payments in some cases are quite large. So one way or the other, these automakers are going to be on the hook for higher costs.
Yeah, and this is in the face of them losing billions trying to ramp up on EV production. You know, Phil brought on the show last night a great Adam Jonas stat that said that everything we're talking about is only 4% of the big three's global revenue. So we're not talking about a tremendous, when you look at these numbers, as you said, they look tremendous, but in relationship to the revenues, they're not that large. The problem is there's been nothing but headwinds for the big three.